everyone, today my group members and I will do a presentation on segmental and interim reporting on Sunway Berhad. This is my group members. Part A, segmental reporting. I will start with the company background. Sunway Berhad is a Malaysian community company, or easily be called a wealthy industrial company. This company is the largest conglomerate and one of top 100 listed Bursa Malaysia Securities Berhad. It was formed following a merger between Sunny City Berhad and Sunway Holding Berhad. The very birth of Sunway Group in 1974 was founded on the concept of sustainable development. Sunway Berhad was incorporated in 1982 and engages in the investment and development of residential, commercial, retail, leisure, and also healthcare properties, primarily in Asia and also Australia. Factor to consider having a segment reporting. Firstly is the nature of the product or services. Secondly is the nature of the production processes. Next is type or class of customer for the products or services. And lastly, method used to distribute the product or provide the services. Let's remove one by one. Nature of the product or services. It is referred to type of product or services. The principal activities of the Sunway Berhad are investment holding and provision of management services. Second, nature of the production process. The nature of production processes is based on the business products. It refers to how the products are produced or the services provided. The third one is the method to distribute the products or provide the services. It refers to how the service being delivered. For example, for healthcare, they deliver the excellent medical outcome. For property development, they develop innovative residential, commercial, and retail properties. And for construction, they are capable of tailoring fully integrated and cost-effective solutions. Fourth one is the type or class of customers. As for Sunway Berhad, there are 6 types of class of customers, which are local and international customers, employees, government and industrial affiliations, local communities and NGOs, shareholders, and lastly, suppliers. There are 8 types of segments in Sunway segmented report, which are property development, property investment, construction, trading and manufacturing, quarry, healthcare, investment holding, and lastly is others. Here are CODM of Sunway Berhad. We have Tan Sri Datuk Sri Dr. Jeffrey Chia, founder and chairman Sunway Group; Chung Siu Kyung, director of Sunway Construction; Lee Chuan Seng, CEO of Sunway Quarry; Chuan Hoi Choi, CEO of Sunway Malls and Theme Parks; Datuk Dr. Lee Wen Keng, CEO of Sunway Healthcare; Wong Fuk Chai, CEO of Trade and Manufacture; and Danny Ng Boon Liang, CEO of Building Materials. Chief of Decision Making (CODM) is not a person that necessarily a manager that have a specific title, but rather a function that have responsibility for the day-to-day operations, responsible for proposing and develop company strategy, ensuring executive team gives appropriate priority to provide reports and make a decision about allocation of overall resources and assessing their performance. Process of identifying reportable and non-reportable segments. The process to identify the segments should be done by using a quantitative threshold test, which are 10% threshold test and 75% total revenue requirement. Operating segments that do not meet the 10% threshold test requirement are not classified as reportable segments. It should be combined and disclosed under all other segment category. Quantitative threshold test comprise 3 methods. First, revenue basis. Total revenue that is consists external and internal revenue must be exceed 10% of combined revenue from operating segment to be reported in the financial statement. Second is profit basis. that is, profit of the segment must be exceed 10% of the total profit from all operating segments. Last is asset basis, that is, asset must exceed 10% of combined asset from all operating segments to be reportable. We can use any of these three methods because it performs the same function, which is calculate the 10% test. As the segment does not meet any of these three quantitative thresholds, the company may be appoint the segment to be reportable if the company believes the information of the segment would be useful to the user of the financial statement. 75% threshold test. Using the 75% total external revenue requirement, the total combined external revenue, which is attributable to the reportable segment, deriving from the 10% threshold test, must be exceed 75% total external revenue. However, if the total does not meet 75% threshold test, then additional reportable segment should be identified until it has met at least 75% of the total external revenue, which is included in the entity reportable segment.
Hi! Moving to the report, we will focus on the revenue basis to test the 10% threshold. The formula that we will use is total revenue of each segment divided by the combined revenue of all segments multiplied with 100%. According to the calculation, property development accounted for 8.69% and it is less than 10%. Thus, it is a non-reportable segment. Next, construction is 33.86%, which is higher than 10%. Thus, it will classify as reportable segment. The calculation applies for all of the segments as stated in the table. To summarize, it shows that construction, trading and manufacturing, healthcare, and investment holdings are qualified for reporting as separate segments. As we can see, there are 4 segments that do not meet the criteria of 10% threshold test, which are property development, property investment, quarry, and others. Thus, they will classify as non-reportable segment. In this case, the company may choose to either report them as separate segment despite its size, or combine them if they are similar segment, or present the relevant information under all other segments category. Okay, after we have identified the reportable segment, we must ensure that the total external revenue of those reportable segments is at least 75% of the entity's total external revenue. To calculate the 75% threshold test, we should take the external revenue of the 4 reportable segments just now divided by the total external revenue of all segments multiplied to 100%. Applying the 75% threshold, we will take the revenue of 2,427,275 ringgit divided by the total external revenue of 3,829,061 ringgit. The current reportable segment did not meet the 75% revenue test since the combined external revenue only 63.45%, which is lower than 75%. Based on FAR570 Assignment, if the external revenue of operating segment is less than 75% of the entity's total external revenue of all segments, we must identify additional operating segment even though they do not meet the quantitative threshold criteria in the first place. So, the next step is to identify additional reportable segment until at least 75% of its revenue is included in reportable segment. Therefore, we will also include the external revenue of property development, which is 494,623 to meet the criteria of 75% threshold. In this case, the new calculation will be 2,921,898 divided by 3,829,061 ringgit multiplied to 100% to get a percentage of 76.31%, which is higher than 75%. To conclude, the reportable segment that will include construction, trading and manufacturing, healthcare, investment holdings, and the additional property development. The other segments, which are property investment, quarry, and others, can be combined as non-reportable segment named all other segments. So, this is the new segmental report that we have constructed. This report is separated into two segments, which are reportable segment and all other segments. The reportable segments consist of 5 segments, which are construction, trading and manufacturing, healthcare, investment holdings, and property development. Meanwhile, the segments that do not meet the 10% and 75% threshold criteria are combined and reported under all other segments. These segments are property investment, quarry, and others. This report is prepared to show the total revenue, profit after tax, total asset, and the total liabilities for Sunway Berhad. The total revenue reported is 3,829,061 ringgit. Meanwhile, profit after tax is 410,574 ringgit. Next, the total assets of Sunway Berhad amounting to 21,121,074 ringgit, and lastly, the total liabilities are 10,782,567 ringgit. As for the conclusion, there are advantages and disadvantages of segmental reporting. For the advantages of segmental reporting, the first advantage is the transparency and improved visibility, which make it easier for the shareholders and the financial analyzers to evaluate the company's performance. The next advantage is the segmental reporting can use as predictor of a company's profitability, because as segmental reporting can separate each segment, they can reveal which areas are profitable and which are drains on the bottom line. It is good for businesses that operate in different categories or geographic areas. Lastly, segmental reporting can optimize context. Segment reporting also allows the stakeholders to get a better sense of the fluctuations that might affect overall numbers. There are also some disadvantages on segmental reporting. Firstly, it's to emphasize on the present. Segment reporting can place too much of a focus on short-term numbers. For example, a business might create a division just for its online work. That division could run a significant deficit before the right people and infrastructure are in the place. If these losses are outweighed by the company's overall performance, they might not stand out on the financial statements. Next, if the data is presented in a true management eyes format, segment reporting lends itself into the data manipulation. This offers companies and leaders more freedom in deciding how segments is booked and what indicators are provided. Managers may combine organization with various business concepts together. It can also pick and choose metrics to send the right message to the right people. Lastly is time and analysis. This analysis may be time-consuming and be difficult to meet a criterion on how each sectors are performing, especially when the sectors share the same resources and the same capital with others.
Part B. Interim Report. Basis of preparation of the interim report. There are two bases of preparation, which are integral method and discrete method. For integral method, interim report is a fraction of the annual report and annual value times with fraction of the reporting period. Meanwhile, for discrete method, interim report is a separate period, for instance quarterly. The reports are prepared on periodic basis. Sunway Berhad are using discrete method as the basis of preparation since the company prepared its financial interim report quarterly. Sunway Berhad has prepared its financial statement using Malaysian Financial Reporting Standards MFRS for the year financial ended 31st December 2020. The interim financial report is unaudited and is prepared in accordance with MFRS 134 Interim Financial Reporting and paragraph 9.22 of the Bursa Malaysia Securities Berhad listing requirements. The interim financial statement should be read in conjunction with the audited financial statement for the year ended 31st December 2019. Next, accounting policy used in preparing the interim report. Accounting policy and method of computation adopted by Sunway Berhad in this interim financial report are consistent with those adopted in the financial statement for the year ended 31st December 2019. Firstly, FAR570 investment properties. Initially, investment properties are measured at cost, including transaction costs. Sunway Berhad adopts fair value model for the subsequent measurement, which reflects the market condition at the end of the reporting period, and changes in fair value are included in profit or loss. When the fair value of an investment property under construction is not reliably determinable, the investment property is measured at cost until its fair value is reliably determinable or construction is completed, whichever comes first. Secondly, FAR570 lease for leasing. As a result of the adoption of FAR570, the existing requirement for a lessee to differentiate between finance lease and operating lease are no longer required under FAR117. This standard introduced a single accounting model requiring the lessee to recognize the right of use of the underlying lease asset and the future lease payment liabilities in the statement of financial position. For lessor, FAR16 allowed the lessor to classify lease as either operating lease or finance lease and to account for these two types of lease differently. For the right of use asset, it contains premises and equipment. Subsequent to initial recognition, the ROU assets are measured at cost less any accumulated depreciation, accumulated impairment losses, and adjusted for any remeasurement of lease liability. It is also measured at an amount equal to the lease liabilities. For lease liabilities, Sunway Berhad measured the lease liability by increasing the carrying amount to reflect the interest on the lease liabilities, reducing the carrying amount to reflect the lease payment made, and remeasuring the carrying amount to reflect any reassessment or lease modifications. Types of interim report. Sunway Berhad prepared a condensed set of financial statements, which are an audited condensed consolidated income statement, statement of comprehensive income, statement of financial position, statement of changes in equity, statement of cash flows, and selected explanatory notes. Sunway Berhad prepared its interim report quarterly, which is 4 times a year for every 3 months. The first quarter is from January to March, second quarter April to June, third quarter July to September, and fourth quarter October to December.
Now, we are moving on to the period of current and also comparative for each statement prepared by the company. Firstly, we look at the statement of financial position. For the current interim report, it started 1st January 2020 and ended on 31st December 2020, which is for a period of 12 months. While for the comparative, it started on 1st January 2019 and ended on 31st December 2019, which is also for a period of 12 months. Next, statement of profit or loss and other comprehensive income. It started on 1st October 2020 and ended on 31st December 2020, which is for a period of 3 months, followed by the cumulative, which started 1st January 2020 and ended on 31st December 2020, which is for a period of 12 months. In the other hand, for the comparative, it started on 1st October 2019 and ended on 31st December 2019, which is for a period of 3 months, and followed by the cumulative, which is started on 1st January 2019 and ended on 31st December 2019, which is for the period of 12 months. Next, for the statement of changes in equity and also statement of cash flow, it have the same date for both statements, which is for the current interim report, it started on 1st January 2020 and ended on 31st December 2020, while for the comparative, it started on 1st January 2019 and ended on 31st December 2019 for both statements. Last but not least, there are two adjustments made by the company to be included in the interim report. The first one is inventories. The cost of inventories as at 31st December 2020 is ringgit, while the net realizable value of the inventories is ringgit. In determining the value of inventories, we need to choose the lower between the cost and the net realizable value. Since the net realizable value is lower than the cost of the inventories, hence the value of inventories as at 31st December 2020 is ringgit. Next adjustment is for account receivables. During the current year ended 2020, the gross amount of account receivables is 2,440,581,000 ringgit. However, it is estimated that there will be 10% uncollectible rate by year end. It means that only 90% of the gross amount of account receivables are collectible. Therefore, the net amount of account receivables to be reported is 2,196,522,900 ringgit. Here is the extract of Statement of Financial Position for the year ended 31st December 2020 for Sunway Berhad before and after the adjustment.